So today I'm going to be teaching you guys macros, how you can trade macros, what time macro is during, and how we can make some profits from macro. Because if you understand how to trade macro, this time window in the market, then you can definitely turn around your trading, I'd say. So what is macro? There are two different macros that we have in New York session. So what is macro? First of all, it's the first 20 minutes after market open volatility. So that's around market open volatilities from market open, which is 9:30 to around 9:45. Okay, so after that, 9:50 is the start of our macro. That's when macro opens. What that means is that we're starting a move for an expansion, either towards the bullish side of the market or the bearish side of the market. Okay, so now that goes until 10:10 a.m. All right, and then we have our second macro, which is 10:50 a.m. to 11:10 a.m. So keep in mind, this macro is a little less volatile. The first macro is the one you generally want to catch. All right, but depending on your trading style, your trading time, you might want to trade that second macro. So we're just gonna do a quick back test on just me going throughout these 9:50 to 10:10 periods to show you guys that this is not a coincidence. This happens almost every day, and you can expect a move during this macro time window every single day. All right, so as we see, this is 9:50 first line, and then 10:10. As we already see, we are having a move higher. Okay, so before that though, 9:30 to 9:45 roughly, that was just starting to move. So sometimes when we start opening market, we take out those retail traders for us to go higher. If you did see my AMD video, I talk on this. So this will kind of be our accumulation, and then our manipulation move happened around that 9:30 to 9:45 time frame. And then our macro period, when we opened around 9:50 to 10:10 a.m., that's where we make our initial move higher. And of course, it's not always going to be pinpoint on the dot, 9:50 to 10:10. Usually 9:50, yeah, but the move can keep going past 10:10. All right, I usually say first 5 minutes of macro, you still want to see direction in the market. As you see here, we didn't immediately shoot up. We had a small retracement, then we went higher. And also around 10:10, I usually put it to 10:15, 10:20. Usually I want to see my move go to. And then after that, I'll say we're done macro. As you see here, we ended macro at 10:30, so it can go pretty far. But yeah, we want to enter a market when those retail traders are already liquidity for us. So boom, let's find another example that I marked out. Go back to the next 9:50, 10:10, boom, right here. Already see here, 9:50 to 10:10. 9:50 is the first line, 10:10 is the second line. We have a beautiful move towards the downside, right? So look, we're going higher though. 9:30 to around 9:45, we're going higher. We're taking out all those retail traders, using that as liquidity for our macro move towards the downside. So boom, 9:50, 10:10. I'm not making this up. Let's go again. All right, boom. All right, look, market open 9:30, huge sell-off in the market. What happens at 9:50 though? Remember, first 5 minutes is a little iffy. We're still understanding our direction that we want to go to, and then boom. Within that 9:50 to 10:10 macro though, we figure out what trend that macro wants to go in, and we go higher. It's a smooth move up. All right, and these are every day. Let's find one more. Boom, right here. Simple, catching an expansion or from the move we already started to make down. So boom, around that 9:50, literally that 9:50 candle, we had a small retracement, and then boom, the whole rest of the macro just sell off, sell off, sell off. All right, and then 10:10, we start retracing back higher. So it's not a coincidence. This happens every day. This is your 9:50 to 10:10 macro, and it's great for just understanding where price wants to go towards and just catching a clean move in the market. Okay, because we're sweeping liquidity before macro. Okay, we're sweeping liquidity before macro. Here's another example. Boom. and AMD playing out. Usually, if I have AMD paired with this and some solid confluences in my model and its macro during the time I'm trading, beautiful A+ setup. Beautiful, beautiful, beautiful. I'm putting you guys on game here. It's like, this might not get too many views, but like, I'm putting you guys onto game. All right. Boom. AMD playing out. Boom, accumulation point in the market. We have that market open 9:30. We sweep that sell side, right? At 9:30, we have our liquidity grab or liquidity sweep, wherever you want to call it. Break structure to the upside. 9:50 macro open. Boom. Glorious trend. Glorious. We didn't even come and fill this fair value gap. Just straight rally higher. And it's like that majority of the time. And we continue this trend until like later in the day too. So if you wanted to hold that, you could. Let's do like 2 more and then let's see. We should be good. Boom. 9:50, 10:10. We have structure playing out. Boom. Had our liquidity sweep. 9:30 to 9:45. 9:50 to 10:10. Boom. Sell off. Sell off. Sell off. Sell off. Macro filled. Market opened. Macro opened. Beautiful. All right. And if you like can find a fair value gap or so around macro open, like we had here, we're tracing to that around macro. We already know macro is going to keep our same direction majority of the time, especially if our conviction is very strong. Yeah, we're just going to hold. As long as we have clear draws on liquidity, macro should imply, you know. And like, of course, no news and all that. Another one. Boom. 9:50, 10:10 a.m. We're making a clear move higher between these 2 blue lines. All right. I'll do 1 more and then we should be good. Like, we should understand this. It's pretty simple. You guys can also see this with 10:50 and 11:10 a.m. Alright, we gotta find it real quick. Boom. Okay, oops. Bam. Where's 10:10? You already see the trend. Like, y'all don't even have to explain it. Right? I had some. Alright, this is like a minor accumulation. Boom. Had a little liquidity sweep at, I'm assuming this is market open because we're having our liquidity sweep from this accumulation. I'll literally draw it. Boom. Accumulation, market open, liquidity sweep. Alright, it's pretty volatile. Market open, coming higher. Small retracement before macro. Macro take smooth move higher. This is a whole trade right here. Alright, we have clear entries. Boom. Fair value gap in play. I have AMD model playing out. Set that. Easy profits to whatever our draws on liquidity are. And I can't see anything because I guess the candles don't go that far. But yeah. See, like, this happens day to day. This happens frequently, and it's not just, I'm not making shit up. Like, that's the simple way I can say it. But yeah, if you guys enjoyed this video on macros, let me know. If you don't understand them, I can go in a little deeper. But yeah, first 20 minutes after market open, like that volatility after market open, 9:50 a.m. to 10:10 a.m. is your first macro. 10:50 a.m. to 11:10 a.m. is your second macro. It's a little less volatile, but it's still macro period. Go catch a trade. Have a great trading week, and yeah, remember, God loves you no matter what situation you're in. And check out the Discord. It's a great active community, all free. Daily calls, weekly calls. It's a beautiful place. All right. See y'all.